In this video, we're going to review the 4 axioms of trading. These axioms are derived from a risk homeostasis management technique which we apply to futures trading. When we talk about axioms, there are 4 rules that guide trading. A lot of people will think that if you take a trade with a 60 to 70% chance of winning, most people will ask, well, what do our trade signals do? Well, first, you must understand the risk and reward. Because if you change the risk and reward, you're going to change the probability of the trade. Now, the risk versus reward equals the probability of your trade or the winning percentage. Now, your winning percentage does not dictate your risk and reward. It's really the other way around. And we're going to show you how to do it. So first, we're going to have a baseline. That baseline is a G4S3 trade. I'm going to risk 3 points in order to gain 4 points. Then we'll evaluate again, compare the results and also the prediction. But first, let's look at the 4 axioms. Axiom number 1, if the target gain is decreased, then the winning percentage increases. Number 2, if the target gain is increased, the winning percentage decreases. Number 3, if the target risk is decreased, the winning percentage decreases. And number 4, if the target risk is increased, the winning percentage increases. Now, these axioms are part of a professional risk homeostasis management, which happens to be what our CEO is an expert in. So these 4 rules dictate our risk management, and they really can be applied to everything, to your relationships, other forms of investments, politics, and decision-making on all different levels. In the beginning, we're going to develop a baseline of a G4S3. We're going to look at every ball, which is our trade signal, without evaluating it. And then we're going to determine if we're going to go long or short based on the color, what the result's going to be, and also what is my risk management. So our risk management is set. We're going for a G4S3. When you see a green ball, we're going to go long. And whenever you see a blue ball, we're going to go short. So if it's green, we're going to ask, did it go up for 4 points before it went down for 3? And a blue ball, we're going to ask, did it go down for 4 points before it went up 3? We're going to keep track on our screen of our wins and our losses. So for the first green ball, did it go up for 4 points before it went down for 3? Yes, this one is a winner. So the second ball, did it go up for 4 points before it went down 3? No, this one is a loser. The next ball, yes, this obviously went down for 4 points before it went up 3, so it's a winner. The next ball, yes, it also went down for 4 points before it went up for 3. The next ball, it did go down for 4 points before it went up for 3. The next ball, yes, it did go down 4 points before it went up 3. And the next ball, it also went down for 4 points, so we have another winner. The next ball, yes, it also went down for 4 points before it went up for 3. The next ball, this one looks like it didn't go up for 4 before it went down for 3, so we do have another loser. And the final ball, did it go down for 4 points before it went up for 3? No, this one is also our final loser. Now let's look at the results. Our total trades were 10. Our total wins were 7. And our winning percentage is 70% because our total wins divided by the total trades equal the percentage. So let's calculate how much money we would have made if we were to take all of those trades. Well, if you have 7 wins and you multiply your total wins by 4 points, that equals 28 points. My losses were 3 points by 3 total losses, which equals 9 points. Now, if you minus 28 points minus 9 points, the net number of points that you would have gained is 19 points. So we have a total of 19 net points and a winning percentage of 70%. Now, one contract equals $50 per point. Now, at one contract, we are going to do some math. So one contract is 19 points times $50 per point equals $950. Now at two contracts, that would be 19 times $50 per point times two contracts equals $1,900. Now if we were to do 10 contracts, it would be 19 times 50 times 10, which equals $9,500. Now at 20 contracts, it would be 19 points times $50 per point times 20 contracts equals $19,000. So now that we know what our trade percentage is and how much money we would have made with our baseline, let's try to manipulate this number by making it higher or lower just by one of these axioms. And speaking of these axioms, they are 100% true, which is why we call them axioms, with the exception that if you have some trades with some slippage, then over the course of time, of course, it may affect one or two trades out of very many trades. Now let's prove axiom number 1. If the target gain is decreased, then the winning percentage increases. So I'm going to change it to a G1S3, a gain of 1 point and a stop loss of 3. And of course, my prediction is that the winning percentage is going to increase. Now we're going to go through every single ball again with a G1S3. Now this very first green ball, did it go up for 1 point before it went down 3? Yes, it did. It is a winner. The second ball, did it go up for 1 point before it went down 3? Yes, it did. The third ball, it did go down for 1 point before it went up 3. It's a winner. The next ball, it did go down for 1 point before it went up 3. The next ball, it did go down for 1 point. The next blue ball, it did also go down 1 point. The next blue ball, it did go down again for 1 point before it went up for 3. This ball did go down for 1 point before it went up 3. The next green ball, yes, it does look like it went up for 1 point before it went down for 3. So this one turned into a winner. And the final ball did go down for 1 point before it went up for 3. So we have a total of 10 winners and no losses. Now the total trades that we took were 10 trades. Our total wins was 10 wins. Our total losses were 0 losses. And that makes our final winning percentage a whopping 100%. By manipulating our gains and our losses, we went from a G4S3 to a G1S3. We adjusted our risk and reward ratios to change our outcome. And the way that we learn how to trade is we learn how to recognize risk and reward ratios that have good outcomes, and we only trade those. As stated in the beginning, we adjusted our winning percentage by the gains in our losses, not the other way around. So whenever you look at this, you may be wondering, so what is so interesting about this? Well, let's look at the net points here. Our total trades were 10. Our total wins were 10. And that makes our total net points 10 because we were at a G1S3. Now previously at a G4S3, we had a total number of trades of 10. Our total wins were 7 wins. And if you recall, our total net points were 19. So our winning percentage for this one was 70%. And for our G1S3 trade, it was 100%. Now if you actually do the math, at 20 contracts with a G1S3 with a total net points, it would be equal to $10,000. At a G4S3, if you recall, 20 contracts equals $19,000. If you notice, even though we had a fantastic winning percentage, the amount of money that we won went exponentially down. So even though our winning percentage increased, our money decreased, which proves the prediction from axiom number 1. And if you look at it the opposite way, you take a winning percentage and you drop your winning percentage, and you could actually increase your money by almost double. Because at the end of the day, trading is about making money, not having a big winning percentage. If you'd like to sit in behind the scenes with the trading group, call 888-646-8787 or go to SP500trader.com.